December 2022, question 6B. Kindly, very fast. Kindly, very fast. December 2022. If you're ready, Eunice and Zipporah, we just start that question. December 2022, question 6B. Kindly. Yes, 7B, sorry, 7B. 7B. Are we on it? If you're on it, we'll respond with the yes. If you're on it, we'll respond with the yes. Tafadhali, so that we don't waste time. Perfect. So we are being told that the data below relates to national income of a certain country in billions of shillings. So I have the consumption. Consumption I'm being told is 500 plus what costs 0.6 YD. I have investment. Investment is a figure of 350. I have government expenditure. That should be 250. I have taxes to be 200. Then I have export minus import. That should give us a figure of 280 minus 0.1y minus 0.1y. So G is the government expenditure. G is the government expenditure. C is consumption. T is taxes. X is export. M is import. Then Y is national income. So equilibrium level of national income. So we say on equilibrium level of national income, Y is equal to C plus I plus G. Then you say plus X minus M together. X minus M. But number one, you need to understand what YD means. That's what you call the disposable income. YD is what you call the disposable income. YD is what you call the disposable income. How do I get the disposable income? The disposable income is equal to Y minus tax together. Is equal to Y, the national income minus the taxes. So I come here, I will have it 500 plus 0.6. 0.6 is what we call the MPC into bracket YD. So how do you get YD? YD is going to be Y. What is the tax? Minus 200. Together, YD is Y minus 200. Kindly respond with a yes. That is Y minus 200. We respond with the yes, Y minus 200. And then you tell me yes. If we together Y minus 200, you give me a yes. So Y minus 200, Y minus 200. So Y minus 200. So if we come to this part, we'll say 500 plus what we call 0.6 into bracket, Y minus 200. I break the bracket. If I break it, I'll have 500 plus 0.6Y. The 0.6 times 200, 0.6 times 200. This is minus 120. I collect like terms. So 500 minus 120, that's 0.6Y plus what I call plus 380, or 380 plus that. So this is what is the consumption. So respond with a yes if that consumption figure is correct. If we understand the consumption figure, we respond with a yes. If the figure for the consumption is correct, we respond with a yes. If the figure for the consumption is basically correct, we respond with a yes. If the figure for what we call consumption is correct, then we respond with a yes. If that figure is on point, then we respond with a yes. Yes, that's perfect. Thank you. So I come back to my equation. We say national income is equal to C plus I plus G plus X minus M. So come here, Y is equal to 0.6y plus 380 because that's the consumption, plus investment, which is 350, plus government expenditure, which is 250. What about x minus m? X minus m is 2 plus 280 minus 0.1 y. Up to that point, is everybody okay? Is everybody okay up to that very point? I hope everybody's okay. So collect the like terms. So 380 plus 350 plus 250 plus 280. Add for me, because those are positive, add for me those 4 items. What do you get? 380 plus 350 plus 250 plus 280. Add for me those items. Add for me those items, kindly. 380 plus 350 plus 250 plus 280. Get for me those figures. Add for me those figures. Very fast. Very fast, good people. So 380 plus 350 plus 250 plus 280. Are you getting 1260? Good people, are we getting 1260? Are we getting 1260? Perfect. So understand y is equal to 0.6y plus 1260 minus 0.1. So this and this, when you adjust them, 0.6 minus 0.1y. What do you have? So that would be y is equal to this. If you less this, that's 0.5 y plus 12c plus 1260 plus 1260 together plus 1260. Once I have that, are we there, Paul? Zipporah, Regan, and Eunice, are we there? So this, collect the like terms, take this one to the other side. So the y minus 0.5 y is equals to 1260. So this is 0.5 y is equals to 1260. I divide both sides with 0.5, 0.5. So y, which is the equilibrium national income, is equivalent to what? What is the figure for y, which is equilibrium? Should it be equals to 2520? 2520. So we have the equilibrium national income being equivalent to 2520, being equivalent to 2520. Thank you so much. So then the level of national income, level of national, we've gotten it, equilibrium level of consumption. So consumption, we have the equation being 0.6y plus a figure of 380. So consumption, equilibrium level of consumption, C is going to be 0.6 times y, which we have 2520, then plus 380. So get for me that, to get equilibrium level of consumption. 0.6 times 2520 plus 380. So consumption, 1892. Are you getting it, 1892? $18.92 as consumption. You replace where there's y. The equation for consumption is this. Are we together? Y consumption is that. Do you get 1892? I'm waiting for you guys. Are you getting 1892? Perfect. Then you respond. So then multiply. How do you get the multiplier? K is equal to 1 over MPC, which is equal to 1 over MPS. Do we have the MPC? Give me the figure for the MPC. MPC ni ngapi? You should pick it from the equation consumption function. What is the MPC? Thank you so much, 0.6. So 0.6. So what is the MPS? MPS should be 1 minus 0.6. So MPS is equal to 0.4. So I come here and say 1 over MPS. That should be 1 over 0.4. So what is K, which is the multiplier? Give me K, which is the multiplier. Give me K, which is the multiplier. K, which is the multiplier. You give me the figure for K, which is the multiplier. K, which is the multiplier. 2.5. Has that question been exhausted fully? Has that question been exhausted fully? Those two examples, that should be done. That should basically be done. That should basically be done. Be done. Together. That should basically be done. Be done. We respond to the yes if that is done. We respond to the yes. I discuss a bit of theory and I turn to some questions. Thank you. So on the multiplier, we talked about assumptions of the multiplier. We call them assumptions. Assumptions of what we call of the multiplier. Assumptions of the multiplier. Assumptions of what we call the multiplier. Assumptions of what we call the multiplier. One of the assumptions is that one, we call it availability of consumer goods. Availability of consumer. Availability of consumer goods. Availability of consumer goods. Availability of consumer goods. The second assumption, I explained them. Overall, we call it overall increase in what's called investment. Overall increase in investment. Overall increase in investment as assumption. Then you say MPC should remain unchanged as an assumption. MPC should remain unchanged. MPC should basically remain unchanged. MPC should remain unchanged. So then we can say induced consumption should have no adverse induced, what we call induced investment. Investment should have no effect. Induced investment basically should have no effect. Induced consumption, sorry, should induce consumption. Should have no effect. So we say that induced consumption should not have no effect on the investment. So if we discuss this 5, we'll have the last one. Then finally 5 on that. Induced consumption should not have no effect on investment. Then we can talk about economy should be less than full employment. Economy, we discussed this. Economy, we say should be less. We call it less than what you call full employment. Economy should definitely be less than full employment. Economy should be less than full employment. Allow me to explain, and I want you to be very keen on those assumptions. I want us to explain and be very keen on on those and be very keen. I want us to explain and be attentive. So what do I mean? The first assumption, we discussed 5 theories to get in the notes. The first one is that economy should not be less than full employment. We basically understand that at full employment, growth of our output, income, and employment stagnate together. So at full employment, we basically understand the growth of what we call the output, income, and full employment stagnate together. So we basically say economy should be less than full employment. But I'm basically saying that at full employment, the growth of employment, income, and what we call output stagnate. And therefore, multiplier becomes very low. So we say that for this to happen, economy should be less than full employment. Bonyeza yes kama tuko pamoja. Bonyeza yes kama tuko pamoja. Thank you. Are we together, Zipporah? And I want to say this is one of the best times to learn. Morning is always one of the best times to learn. So the second assumption that we put there, we say that the next will say that induced consumption should have no effect on investment. Induced consumption should not have effect on investment. So basically, when you talk about induced what we call induced consumption should have no effect on investment. We basically understand that induced consumption should have no dampening. Are we together? Dampening effect on consumption. What am I saying when I say that induced consumption should have no dampening effect on investment? We are basically saying that it is assumed that the accelerator should not interfere. It therefore means that the accelerator, which I'll discuss, should not interfere with the working of the multiplier, which should not interfere with the working. Then that is to mean that accelerator should never be less than 1. Accelerator should never be less than 1. Should never be less than 1. Accelerator. This is accelerator. Should never be less than 1. Should never be less than 1. And I'm talking about accelerator. Should never be less than 1. Give me yes. Then you say MPC should remain unchanged. So marginal propensity to consume is assumed to remain unchanged. And failure, if there's failure for it to remain unchanged, the value of multiplier will be unstable. We're saying that the marginal propensity to consume should remain unchanged. And therefore, we're saying that if it fails to remain unchanged, then the multiplier will do what we call unstable. Multiplier will definitely be unstable. We respond with a yes. The multiplier will definitely be unstable. You give me a yes if you're there. The multiplier will definitely be unstable. So then the next we talked about overall increase in investment. So an increase in investment, that is to say that an increase in investment in one sector. If investment basically increase in one sector, if an increase in investment in one sector should not, we're saying that should not offset disinvestment in another sector. So when one sector is not, investment does not increase and one sector is increasing, so increase in investment in one sector should not do what? Should not basically offset what we call disinvestment, lack of investment in another sector altogether. And therefore we're saying that if that particularly happens, then you say the overall increase investment in economy would be very low or zero. And so income generation, and so as income generation and multiplier will have what we call little to multiply. Multiplier will definitely have little to multiply. So if one sector investment is increasing, it should not offset. And if that happens, we basically understand that the multiplier will have what you call little to multiply. If that happen, are we together? In the economy, investment economy would be low or zero. And the multiplier will multiply, will have little to multiply together. If investment in one sector offset another, disinvestment in another sector, together, we respond with a yes. We respond with a yes. Kindly, we respond with a yes, then we proceed to the next. Then we go to importance of multiplier in economy. Importance of multiplier in an economy. What is the beauty of multiplier in an economy? Then I want to talk about accelerator. What is the importance of multiplier in an economy? So one of the importance of multiplier in an economy, we definitely understand that the level of national income increases. Are we saying that with multiplier, the level of national income increases? Even in our calculations, have you noted that the level of national income definitely increases with the multiplier? Together, the level of national income increases. Then promote investments, promote what we call investment. Since what we call the level of demand, we understand increases since the level of demand increases. So promote what we call investment, since what we call the level of demand basically increases. Then we know that promote creation of employment. We say promote, we understand promote what we call creation of employment. It promotes creation of employment. With the increase in national income, promote an increase in investment, promote what we call employment. Government, if there's investment, government revenue through taxes increases. Government, we say revenue, we call it through taxes, we call it increases. Government revenue through taxes increases. The government revenue through taxes, we understand that increases. Did you say promote the level of economic growth? Promote economic growth and development. We can call it promote what we call economic growth and what's called development. So this definitely promote economic growth and what's called the development. So if you ask the importance of the multiplier, you give those together. Those are the importance of multiplier, which is equally easier to remember. Is that true? Are those easy to remember? Give me a yes if those ones are easier to remember. If those ones are easier to remember, perfect. So we say factors that limit application of the multiplier. Factors, we call it factors that we say limit application, what we call application of what we call of the multiplier, in what we call in developing countries. Factors that definitely limit what we call the application of what we call the multiplier in developing countries. Factors that limit what we call application of the multiplier in developing countries. So we say one of the factors that basically limit what we call the application of the multiplier in developing country. Remember when you talked about leakages or withdrawals. So we say leakages from the circular flow of income. One is the leakages or withdrawal, leakages from what we call from the circular flow of what we call income. So the first thing, leakages, examples of leakages are what we call the leakages from the circular flow of income. That will definitely, we say, limit the multiplier, limit what you call the value, will reduce the value of multiplier, reduce the value, we say reduces what you call the value of what you call multiplier. Together. So that is the first, what you call the first, that is what you call the first, we call it the first factor that limits what you call application of the multiplier. We respond with a yes. The first factor that basically limits the application of the multiplier. We respond with a yes. We respond with a yes. Thank you. Then we say that the benefit of multiplier may not be felt. The second limitation, the benefit, what we call the benefit of what we call of the multiplier, So the benefit of the multiplier, what we call the benefit of the multiplier, may not be felt immediately, may not be felt, we understand, may not be felt immediately. We say that the benefit of the multiplier may not be felt immediately due to possibility of what we call of long, we call it long period of what we call adjustment, due to possibility of long periods of adjustment, due to the possibility of long period of adjustment, due to the possibility of what we call long period of adjustment. But we also say that the third limitations is that it assumes a closed economy with no foreign transactions. It assumes a closed economy. You remember two-sector economy. There's not what you call foreign sector. It assumes what you call a closed economy. With no, we say with no foreign, we call it foreign sectors, with no foreign sector. And that we remember. Closed economy, there's household and farm. That's what it assumes. Then we can also talk about multiplier, assume that there's no change in price of commodity. It assumes as a limitation, assume there is no change, there is no change of price in what you call in the economy. Assume that there's no change in price in economy, assumes that there's not what you call, there is no change in price in economy. There's no change in price of economy in economy. There's no change in price in economy in an economy. Then lastly, we can talk about what you call the last limitation. In an economy where there's full employment, in an economy where there's full employment, in an economy where there's what you call full employment, in an economy where there's full employment, in an economy where there's full employment, we understand that an increase in demand, an increase in what you call in demand, an increase in demand, in an economy where there's full employment, we understand that an increase in demand would cause what you call inflation, would cause what you call inflation. An increase in demand. When there's full employment, we know there's a lot of money in circulation. An increase in demand definitely will cause inflation, hence reducing hence reducing what we call the value of multiplier. Hence reducing what we call the value of what we call the multiplier. Hence increasing, reducing the value of what I call the multiplier. Hence reducing what I call the value of the multiplier. Hence reducing what I call the value of what I call the multiplier. Hence reducing what I call the value of the multiplier. So those are the limitations of the multiplier together. Limitations of the multiplier together. Give me a yes. So types of the multiplier. I can talk about types of what I call types of what you call multiplier. Types of the multiplier. And I want to summarize these types of multiplier. There's something we call investment multiplier. With formulas, it is easy to explain this multiplier. There's a question in 2022 that asks for types of multiplier. I'll say there's a question in 2022 that basically asks for the types of multiplier. So investment multiplier is what we call change in what we call in GNP over what we call change in investment over the change, what we call change in what we call in investment over the change in what we call invest. So change in GNP over what we call the change in investment, change in GNP over change in what we call investment altogether. So when you say this, what does this mean? Even if I don't write the definition, what does that basically mean? When I told investment multiplier, I say change in GNP, which is change in national income over change in investment. The number of times a change in investment can be multiplied to arrive at a higher level of national income. So just say the number of times in which change in investment can be multiplied to arrive at what we call a new and higher level of national income together. So if you don't remember in economics, we will give you the answer. If you write this, you ask investment, and you cannot explain it, just write for change in GNP over change in investment, we will give you together. That will definitely be provided. Then we have what we call the government. Now what we call government multiplier. If you can't write that, so that is change in GNP, what we call change in GNP over what we call change in what we call in government expenditure over change in what we call government expenditure over change in what we call government expenditure over change in what we call government expenditure over the change in what we call government expenditure over the change in government expenditure over change in what we call the government expenditure together. Then you can be asked what is an export multiplier. Export multiplier, we call it change in GNP over what we call change in export. I hope you're very keen in understanding what Mwalimu is saying. Are we understanding what Mwalimu is saying? I've explained that. Are we understanding? We respond with a yes if you're understanding. Thank you, Eunice. So then I come to this. I basically come to this. And I talk about this consumption. These are exogenous factors. Consumption multiplier. That is change in what we call in GNP over change in consumption. In what we call in consumption. Over change in what's called in consumption. So the change in GNP over what we call the change in consumption. The change in GNP over the change in consumption. Then you can talk about the tax multiplier. You can be asked on tax multiplier. Multiplier, that is change in what's called in GNP over change in taxes, over change in taxes, change in GNP over change in taxes, change in GNP over change in what you call taxes. So you can be called fiscal. Fiscal is the same as what's called, fiscal is the same as government expenditure. So fiscal touch on government expenditure and taxes, but you just say when you're told fiscal, it's the same as fiscal touch on this fiscal multiplier. Hebu tubonyeze yes kama tuko sawa. Na kama tuna swali tuulize. I want to show you some, this is also block. If you're there, give me a yes. Kama tuko hapo tubonyeze yes. Thank you, Regan. I just want to show you something, on that paper. Nothing in this paper should be very difficult for my students. Just in 2022, there's some very beautiful questions in 2022. Very beautiful question. Very beautiful question in 2022. That is what I want to bring to your attention. Very amazing questions in 2022. So August 2022, that you can do by yourself. Able note August 2022, question 7B. August 2022, question 7B. That you can do by yourself. Is that okay? August 2022, just note it. August 2022, question 6B. Please note that August 2022, question 6B. That can be done by you. Please note that and you raise August 2022, question 6B. Then now where I want to be and where I want us to look up. I want us to pick question 5, that is April 22, question 5. April 22, question 5. Please be with me there. For the August, have you noted April 2022, we have it as question 5. Please, make sure you're with me. Make sure that you're with me. Tafadhali. Have you noted that August is one of the things that we'll be doing? Are you there? Are you together with me? Are you together with me? Yes. Hiyo swali ya August 2022, question 6B. Can you do it? You give me a yes if you can do that question. If you can do that question, you give me a yes. Paul, if you look at that question very fast before I get this question 5, can you tackle that question? Can you tackle that question? It's just what you've done. You give me a yes, kindly, if at all. Regan, can you tackle that question of August? I'm doing April, but I'm saying, can you tackle that question in August? Perfect. So we look at that question 5, tafadhali. April 2022, question 5. Kindly, we be there. We be there. The following table. So being told that the following table show the level of national income show the level of national income, consumption, investment, government expenditure, or government spending, export and import of a utopian country for the year 2020 and the year 2021. So the level of consumption in 2022, how do I get the level of consumption? I only need to understand the formula that Y is equals to C using expenditure plus I plus G plus X minus M plus X minus M. So that we start with 2021. There's a space that is missing there for consumption. So we don't have this. I have what? I have the national income, which is Y, that is 80,000. I don't have C, so C you just put there. But I have investment. Investment ningapi ni 10,000. I have investment 10,000. I have government expenditure, which is 40. Are we together? Then plus, we put it into bracket, export minus import. So 100,000 minus 120,000. Here, equation to us out. Whenever I ask that in that equation, do we understand that equation? Do we understand that equation? What I've done, can we say that we understand that? Do we understand that, Paul, Zipporah, Kitawe, Regan, and Eunice from the equation? I've simply substituted. Perfect. So I come here, 80, which is the national income. C that I don't know. This plus this is 140. Then 100 minus that, that's minus 20,000. Minus 20,000. So I can simplify this further. I have 80, 80, 80. I have that is 80, 80. So this was 10,000, sorry. This is 50. Good people, you must be very keen. This was 10,000. 10,000 plus 40, that is 50. Together, good people. Good people, hiyo ni 50 niliandika 140. So 10,000 plus 40,000, that is 50,000 good people. Is that okay? So nimeandika hapo 140, which was wrong. But I'm saying 10,000 plus 40,000, that should be 50,000. So you're good people. Good people. Are you together with Mwalimu? Mwalimu aliandika 140, which was wrong. And I've changed by saying 10,000 plus 40,000. Na tubonyeza haraka haraka. You encourage Mwalimu by saying, Mwalimu, yes, we are there. Are we there? Yes, that is. So then 50,000 minus 20,000. So that should give me C plus what's called plus 30. 50 minus 20, that should give us 30. So consumption that is missing. What is consumption? I leave it here. I take this one to the other side. So consumption should be 80,000 minus 30,000. So the missing in consumption, that should be 50,000. That should be 50,000. So what is missing in that part is C is 50,000 together. C is 50,000. C is 50,000. C is 50,000 together. C is 50,000 together. Tuko pamoja. C is 50,000. So then the examine asked marginal propensity to consume. That is in 2020, MPC in 2020. So MPC is change in consumption over change in Y. Change in consumption. So for 2022, 2021, it is 56 minus 2021, which is 50, over change in national income, which is 90 minus 80. 90 minus 80. These are figures. Tunaona mwalimu amezipata. Change 2021 minus 2022. Nashukuru. Eunice peke yake ndio naona. Paul, unaona hizo figures? Are you able to see those figures? Are we able to see those figures? Perfect. If you're able to see those figures. So then I have 6,000 over what you call 10,000. So what is that? What is that? So that should be 0.6. So that is the MPC. That is 0.6. Together, 0.6. Bonyeza, yes, if we are together as 0.6. If that 0.6 is at all, then we respond with a yes. So that is 0.6. Great. So wanatuchezea tena, wanatuambia the level of import. There's no import. The level of import in 2021, 2021. Again, I come with my formula. I understand that national income is equal to C plus I plus G plus X minus M. 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 Plus the X minus M. I simply just replace. I have this Y as 90 is equals to C, that is 56, is equals to I, which is 15,000, is equals to G, which is government expenditure. That should be 34. That should give me 34 plus, open that bracket, please. Now your bracket, hold the bracket. So this is 110 minus input, which is I, or M. We have it as given as M. Input, which we give it as M. Together. Add this, add this, add this. Add for me those. Add for me those. Add for me those. Add for me those figures. Add for me those figures, those three. 56, I can see it. I have 105. See, that should be 105. Plus 110. Is equal to 90. To cost our team up to that very point. All of us, can you say we are together? Are we together? Are we together? Are we together? So perfect. I can now break. This is this I can now break. I have, when I break it, I have 105 plus what I call 110 minus M. So add for me that is equals to 90. So 110 plus 105. This should give me 215. 215 minus M is equals to 90. Minus M is equals to 90. 215 minus M is equal to 90. We respond with a yes. So then, how do we get M? How do I get M? Bring M to this other side, it becomes positive. Take this one to the other side, it becomes minus. So I have M is equals to 215 minus what? Minus 90. Give me that, 215 minus 90. So 125. Kila mtu ako sawa. Kitawe, are you comfortable? Is it okay? Eunice, are you okay? So I've got an M. So then I'm asked marginal propensity to import. That is MPM. That is change in import over change in Y. So what is the change in import? That should be 125 minus 120 over 90 minus 80. So that should be 5 over what you call over 10,000. That should be 0.5. Together on 0.5. That is 0.5. Eon is 0.5. That should be 0.5. That should be 0.5. Together. All of us, do we understand that's 0.5? Is it 0.5? Yes. So define the term. Let me just revise that. Define the term per capita income. That is GNP over population. So if you're told, explain the term per capita income, is that total national income over the total population, or GNP over total population? Are we together? GNP over total population. So the next, explain the term per capita income. What is per capita income? Per capita income. So that should be GNP over what you call the total population. See the video to my father. GNP over total population or over population. So enumerate limitations of using per capita income. So what do you say limitations? But this is a very interesting, the government will tell us our per capita income has increased. Does it measure happiness? The per capita income could be so high, but people are what? People are sad. It does not measure happiness. Where you can have the per capita income is so high, but people are so sad in a country, it does not account for effort. Remember when I said some of the people who work extremely hard, like the guys on construction, these guys work extremely so hard, but at the end of the day, in terms of per capita income, they're being paid less, they're producing less. So it doesn't account for what you call effort. Again, number 3, it was how many marks? That was 4. Another limitation. What is another limitation? Per capita income limitation. I've talked about does not measure happiness, does not account for effort, and I've said next. Next, what did you say next on per capita? Arakaraka next. True for my students. Apart from that, what did Mwalimu say? Apart from that, what did Mwalimu say? Apart from those two, does not account for economic activity. It simply talks about total income. Are we together? Total income. Are we together over that? Does not account for economic activity. And lastly, it does not show distribution of income. Majority of the time, Paul and Kitawe and Eunice, you'll find those who there's maybe 4 people who have investment income. 4 people who have done a huge investment income. Are we together? A huge investment income. So literally we can say there's a percentage, 20% are the ones who are accounting for that. But 80% are extremely poor. So it does not show distribution of income. You can find that the per capita income is basically produced by the 20%, the extremely rich. So it does not account for the distribution of income. It does not account for the distribution of income. Bonyeza yes, and you tell Mwalimu, we have gotten you. Together. We respond to the yes kindly. That is an encouragement to Mwalimu. Mwalimu also needs encouragement. Zipora, does Mwalimu need encouragement? Does Mwalimu need encouragement? Yes, Mwalimu does. Yes. Then we say that I like 4 factors that limit what we call effectiveness of multiplier in developing countries. highlight 4 factors that limit what we call the effectiveness of the multiplier in developing countries. We've just talked about it right now. What are those factors? Leakages in circular flow of income reduce what we call the value of the multiplier. Number one is the leakages in the circular flow of income basically limit the value of what we call the multiplier, limit the value of the multiplier. We say that it assumes what we call a closed economy where there's no foreign sector, but you say the multiplier assumes that there's no change in price of commodity in an economy. It assumes that there is no, that there's no change in price of commodity in the economy. Are we together? Then you say that we say that a closed economy, and you say that in an economy where there's full employment, there's increase in demand, which lead to inflation, which hence reduces what we call the value of the multiplier. So we say that in a situation of full employment, there's what we call increase in demand. An increase in demand basically leads to what we call inflation, which eventually we say will reduce what we call the value of the multiplier. Are those questions exhaustively sorted? Those questions exhaustively sorted? That made April 2022 perfect. There's a question that was asked that, again, also in 2022, I'm just showing you that question on the types of multiplier. A question on the types of multiplier. A question that touch on the types of multiplier. The types of what we call multiplier. Either 2022 or 2021. On the types of multiplier. It is 2023 April. Look at the 2023 April. Kindly, 2023 April. 2023 April, question 4B. April 2023. April 2023. Question, we give it as question 4B. Tafadhali, kama uko hapo niambie. If you're there, you let me know. If you're there, you let me know. B, so we ask investment multiplier. Multiplier. So that is change in I over change in, change in Y over change in what you call in investment together. The number of time, the change in investment would lead to a higher change in the national income. So change in Y or GNP, or change in this change in GNP over change in I together. When I'm asked government multiplier, what we call the government multiplier. So that is change in GNP over change in government expenditure, which is change in G. When I ask export multiplier, that should be change in GNP over change in what we call, over change in export, which is X. The change in consumption multiplier, change in GNP over change in consumption. But now, realistically, I've said, if I look at this, can I be difficult to explain? Or there's a shade of explain if I have this formula. I think this is the number of times in which change in investment arrives to a higher change in national income or the GNP. Are we sorted on those? Give me a yes. These are marks. Can we be able to scoop those marks? Are we able to scoop those marks? Are we able to scoop those marks? Nashukuru sana. Mungu awabariki. So then I wrap it and I'll pick another momentum on something. I pick a momentum on something. I pick a momentum on something. I pick what I call a momentum on something. And just remember, I always encourage students something, one of the first things, one of the first foundations. I teach this in the morning, but this is one of the, without God, we can be nothing. Without God and without God helping us, we cannot achieve anything. So no, is it true, Paul? One of the greatest foundations in life and a big secret that people have never really understood. You can be so talented, but without God, we are empty. Even as we teach here, we teach by the grace of God. And one of the things that I teach my students is just to, if God is with us in everything that we do, we will always be at a higher level. Yes. And if God is with us and we put effort, we will always excel. Is there anybody who needs a break? I'm hoping not. I want to talk about the accelerator theory or accelerator principle. Accelerator theory, we call it the accelerator theory, or what's called accelerator. Tunaita accelerator principle. The accelerator theory, or what we call the accelerator principle. The accelerator theory or the accelerator principle. What does this accelerator theory or principle talks about? Accelerator theory and principle. What does it talk about? So whenever we talk about accelerator theory or principle, is there anybody who needs a breather kidogo? Is there anyone who needs a breather? A breather of 5 minutes? Yes, sir. I knew I don't want to. So a breather for how many minutes, Regan? You need a breather for how many minutes? A breather for how many minutes? Okay, have it. Then we come back. We can pull up and begin. So are we there? If you're there, you give me a yes. If we are there, then you give me a yes. If we are there, then you give me a yes. If you're there, then you give me a yes. Perfect. If we are there. Perfect if we are there. Perfect if we are there. So then I talk about the accelerator, so what we call the accelerator principle. So whenever we talk about the accelerator, so the accelerator principle, it's basically a principle in economics that says that the level of investment depends on consumption. A principle in economics, a principle in what you call in economics that talks about that the level that says that the level of what you call of consumption, that the level of consumption we say depends on what you call depends on consumption. That the level of investment depends on consumption. It's a principle that in economics that basically states that the level of investment basically depends on what you call consumption. Consumption is basically demand. Are we together? Consumption is basically demand. Together. The more people consume, the greater the demand together. So basically to imply that investment is basically high when the level of demand increases together. Investment is high when the level of demand increases. Basically to imply that investment in economy increases as demand increases. Investment, we say in an economy, we say increases as demand increases, So if an examiner tells you in an exam, Paul, what is that accelerator principle? And vice versa. And what you call vice versa. And the vice versa. The vice versa is the opposite. So if demand decreases, then investment in the economy reduces. We respond with a yes. If demand, we understand that if the demand decreases, then we understand that the level of investment reduces. Nipatie yes kama tuko pamoja. Nipatie yes kama tuko pamoja. So then I want to talk about the relationship between multiplier and accelerator. How do they relate? Relationship between, I talk about relationship between what we call accelerator, and what we call the multiplier. How do these two things relate? The relationship between the accelerator and the multiplier. How do these two things basically relate? How do these two things basically relate? What is the relationship between the multiplier and the accelerator? So we need to understand that at the back of our mind, how do these two things, multiplier and accelerator, basically relate? How do they relate? Then a small story, just very early in the morning. Words of wisdom. Words of wisdom. Very important. Whenever you are going for an exam, don't always. One of the trickiest things in exam is always feeling like you know everything. A person who always feels empty will always learn a lot. Is that true? Always feel very empty. Even if you did the exam, always feel like you're doing it the first time. Are we together? Always feel like it is something new. Are we together? But particularly for this unit, are we together? One thing that I always tell people, and the research particularly in this unit, a lot of times people don't perform it, especially for the HED nowadays is performed perfectly well because of the multiple choices. But these units are in the foundation. Economics has not been performed well, and there's always what we call higher number of people not passing it. Are we together? Would you believe that in economics you can have in an exam an average of 38%, or maybe average is 30? If you look at that, would you believe that happens? Having an average of 30. Paul, would you believe in that foundation? So some guys think about calculations as as the hardest in foundation. But one of the units that is a bit complex is economics in that foundation level. Are we together? So take care. I encourage you to take care of it. Though my students never fail in this, are we together? Though my students never fail in this, are we together? So I want you to look at it very keenly. Economics is, especially the micro. Micro is very detailed. Those things are very specific, especially if the exam contains those issues of demand, issues of consumer behavior, issues of the theory of a farm. Those requires what we call very specific answers. You either know or you don't know. But if, for example, like on a weekend, that is on Saturday, we begin revision on economic growth and development. You realize that some questions are applications. Have you noted? As we begin revision on Saturday, that is economic growth and development, you realize that some are applicable. Are we together? Some are just basically applicable. They're general. You can answer. For example, when I get to unemployment and inflation, I ask you, what are the reasons, effects of unemployment? What will be effects of unemployment? What causes unemployment? Maybe a question that can be very difficult in that is when you ask the types of unemployment. But when an examiner tells you, what are the causes of unemployment? You need to be in class in order to answer that question. Paul, I'm simply breaking down some of the notes that you have. And as I get there on Saturday, you realize that some things are we together. Basically, in an exam, if you look at it, it's good to teach you those principles. As I will be releasing you for exam, there's some topics basically in an exam that you'll notice the more of general application. The more in all units, you'll notice that there's some particular areas that you realize that these are just general principles. They've got to do with general principles. I'm asked causes of unemployment. I don't need to be class to answer causes of unemployment. How do you solve issues to do with unemployment? I don't need to be in a class in order to score something in that area. Those particular areas, those are probably you can use the general principle. But now back to what is this? I talked about multiplier. I've talked about now accelerator. That basically a principle in economics that basically say that the level consumption, the level of investment depends. Sorry, I wrote consumption. The level of investment depend on consumption. That basically says that the level of investment basically depends on what you call the consumption. That the level of investment basically depends on what you call the consumption. The level of investment basically depends on what you call the consumption. And that's why I say that increase in demand, consumption, which is demand, increase in demand leads to higher level of demand, a higher level of investment. Increase in demand basically leads to high investment, and the opposite is true, meaning that if the demand is low, investment basically is low. Back to what is the relationship between the accelerator and what you call the multiplier. So multiplier, you need to understand, brings about a higher level of what you call multiplier brings about a new and higher level of consumption. So multiplier brings what you call a new and what you call and a higher, what you call a higher level and a higher level of what you call consumption. So the multiplier basically brings a new and a higher level of consumption and a higher level of consumption due to increase in income, due to increase in income. So look up, when I was talking about multiplier, we said that multiplier brings increase in investment, brings about economic growth and development. So I'm saying that with multiplier, it brings what you call a new and a higher level of consumption. Due to what? Because multiplier effect brings what you call a higher increase in income. It brings what you call a higher increase in income. It brings what you call a higher increase in income, a higher increase in income, a higher increase in income. So then we know that we understand that an increase in demand leads to increase in investment through the accelerator. So you need to what do you call an increase in what you call in investment, an increase in investment. We understand that an increase in investment leads to an increase in demand, which is consumption. Remember, are we together? An increase in demand brings about what you call an increase, brings about what you call an increase in an increase in investment, an increase in investment through what you call the accelerator. Together brings about an increase in investment through what you call the accelerator. Together we respond with a yes. Nipatie yes hapo. Nipatie yes tafadhali. Tafadhali. Thank you. So benefits of accelerator in economy. So I talk about benefits of accelerator. Am I eating much of your time? I hope I'm not eating your time a lot of it. You can give me 10 minutes. Can you give me 10 minutes? I know some people are going to work. Can you give me 10 minutes? Can you give me 10 minutes? Can I be given 10 minutes? Perfect. But just know that we are there. No need to panic. I will revise this econ. I will revise any unit that I teach you. One thing that I assure you as my student that we will revise them exhaustively. And I assure you that once you go for this economics, at least 80% of what you've done, you'll see it in the exam. At least 80%. As you choose questions, choose them wisely. You realize that most of the questions that will come in that exam, it is things that we have done in class. Are we together? So we say, what is the benefit of accelerator in economy? It promotes level of economic growth and development. Promote, we call it promote, what we call level of what we call of economic growth, and what we call development. It promotes what we call level of economic growth and what we call development. It promotes what we call the level of economic growth and development. It increases what we call the level of income. It definitely increases what we call the levels of income. It increases what we call the level of income. Then promote investments. Promote what we call investment through what we call increase in demand. Promote, increase the level of income. Promote economic growth and development. Angalia hapa, I always teach people, like I was teaching you, in difference curve and isoquants together. You remember the isoquants and indifference curve. They were, when you're reading those ones, then you're talking about theories under consumer behavior, the things that are common, like this. When you're talking about accelerator and what we call the multiplier, benefits, promote economic growth, those are the same. Creation of employment, that should be the same. Creation of what we call employment, creation of what we call employment, creation, government revenue through taxes increases, government revenue through taxes, we call it increases. Government revenue through taxes increases. Government revenue through taxes, we understand, increases. Government revenue through taxes definitely increases. Government revenue through taxes, we understand, increases. Government revenue through taxes increases. Government revenue. So those are the same. If you are told the benefits of accelerator and benefits of multiplier, those are equally more or less the same, together. Nataka note there. When I was talking benefit of multiplier and now benefits of accelerator, are you seeing similar things? You give me a yes. Yes. So then limitations of the accelerator. Limitations. Then I want to do one question on something. Limitations of what we call the accelerator. 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 Limitations of the accelerator. So what are the limitations? We say one, an increase in demand in an economy. One is an increase in demand, an increase in demand in an economy, an increase in demand in an economy, what we call an increase in demand in an economy, may be limited by rise in inflation, may be limited by rise in inflation. And that is true. In inflation may be limited in rise in inflation. That an increase in demand in the economy may definitely be limited by rise in inflation. Even if there's increase in demand, it may be limited by rise in inflation. And inflation, though we've not gotten there, the cost push inflation. Demand pull inflation, cost push inflation. Have you read them? Paul Kitawe, yes, cost push inflation, demand pull inflation. Are we together? And other types of inflation. Are we together? What is the what is the effect? There's a positive effects of inflation and the negative effects of inflation. Are we together? Then we can talk about, to say, increase in demand in economy may be temporary. Increase in demand, increase in what's called in demand may be temporary, increase in demand, we say may be temporary, increase in demand, we say may be temporary, increase in demand may be temporary, and hence impact on investment may be short-lived. Hence, what we call impact on demand, we say may be short-lived, So increase in demand may be temporary. So increase in demand, impact on what we call the impact on investment, not demand, maybe impact on investment may be short-lived. We understand that increase in demand leads to increase in what we call investment. But you see that increase in demand may be temporary. So the impact on investment may basically be short-lived. So we can talk about Accelerator assume mobility of resources. Accelerator assumes what they call mobility of what they call of resources. Mobility of resources. It assumes what we call mobility of resources. However, resources may be mobile. However, we understand resources may be what we call immobile. However, resources may be immobile. However, the resources may be immobile. However, resources may be immobile. However, resources may be mobile. Investment in economy. Investment, we understand that investment in an economy. In an economy, we say may be influenced. We say by what we call by other factors. Investment in an economy, we understand that may be influenced by other factors. Other than what? Other than demand. Are we together? Other than demand. Saying that demand only is the one that is influence what we call investment. May be influenced by other factors other than what we call demand. And I ask a question, a very simple question. What are other factors that influence what we call investment? We have what we call interest rate altogether. Other than demand, even the interest rate altogether, the interest rate that the banks are giving. When the bank gives a high interest rate, what is the level of the investment economy? When the interest rates are very high, we understand that the level of investment in an economy goes down. But when the interest rates are lower, the level of investment goes high. We can also talk about government policies. Policies that the government basically put in place may be conducive or unconducive for investment altogether. And lastly, we can talk about as another limitation of the accelerator, we understand that demand for commodity may increase and may contribute to what we call economic, may not contribute to economic growth and development. So the effect of demand, we understand that if demand is high, investment is high. But we're saying we are introducing what we call a contrast, that this may not actually affect, may actually not bring what we call economic growth and development together. Are we together? May not bring what we call economic growth and development. For example, an increase in illicit brews and drugs may bring what? May limit what we call investment. For example, in scenarios where there's increase in illicit brews and drinks, it may definitely hamper what we call investment. Then there's a small calculation that I want you people to learn. When we call, we can have what we call the saving function. There's a small question. Please allow me just to do it. There's a question that I think a student asked me last year on this particular. We know that Y is equal to consumption plus investment together. Income is either consumed or invested. Are we together? Income is either consumed or invested. Are we together? Income is either consumed or invested. Are we together? But sometimes if we don't invest, investment can be equals to saving together. If we don't consume, investment, if we don't invest, we can save. Are we together? So I is equals to S. So that is to say that we can have Y being equals to consumption plus S. Y is equals to consumption plus S. Tuko pamoja. How do I get the saving function, which is S? S should now be equals to Y minus consumption. Y minus consumption. Bonyeza yes kama tuko sawa. Then I just pick one question. Then I leave you. One question, then I leave you. One question, then I leave you. That's just question. Then I leave you. Thank you for that noble gesture that you people have shown me, for allowing me push you, but I thank God for you people. I thank God for you people. I thank God for you great people. I thank God for you great people. Just a minute. Can you look at August 2023? August 2023. August 2023. August 2023. August 2023. August 2023. Question 5A. Question 5A. Question 5A. Question 5A. Can you look at that? Are you there? Are you there? There. So there's an equation there. You're being told the following function relate to a hypothetical economy. Autonomous consumption is 8,000. Autonomous consumption is 8,000. Autonomous consumption is 8,000. Marginal propensity to save is 0.45. Marginal propensity to save is 0.45. 0.45. is 0.455. Then you ask the saving function. So the autonomous consumption is 8,000. Marginal propensity to save is how much? Marginal propensity to save is how much? Marginal propensity to save MPS is 0.45. What is the MPC? Give me the MPC. Provide me with the MPC. MPC, if MPS is that, MPC ni ngapi? For 0.5. So that is 0.5, huh? 5. So say Y is equal to C plus S. So what is consumption function? Consumption function would be 0.55. Sorry. Consumption function would be 8,000 plus what? That is the consumption function. Together. That is the consumption function. Is that the consumption function? Tubonyeze yes, if we have the consumption function. Perfect. So we come back here and say Y is equals to C plus S. So Y is equals to 8,000 plus 0.55 Y plus S that you don't know. Collect the like terms. Collect the like terms together. So what is happening? Look up. So this is going to be Y minus 0.55 Y is equals to 8,000 plus S. So this is going to be 0.45 Y is equals to 8,000 plus S. So what is S? Bring this one to the outside. So the saving function is going to be 0.45 Y minus what we call 8,000. So this is the saving function. Tumeona hiyo saving function? Have you seen how we've gotten the saving function? How we've gotten the saving function. Perfect. So I just want to stop it there. God bless you, and God bless our class. God bless you. And on Saturday, can we have a 3.5 hours of a con? Can we have a 3.5 hours of a con? That is from, we say from 8 to 11:30. Can that be done? 8 to 11:30. 8 to 11:30. 8 to 11:30. Is it okay? Eunice, 8 to 11:30. Eunice, 8 to 11:30. A con. That is AM, 8 AM. Because I know majority do not go to work at that time. 8 to 11:30. Is that okay? 8 to 11:30. Will that be okay? 8 to 11:30 on Saturday. Thank you so much. So remind the guys, ICT student, we are meeting today 8. Kindly is the portal at 8. We need to wrap up everything, then we start on our revision tomorrow. So 8:30, 8:30 in the evening. Together, Zipporah. That is now for Zipporah. You give me a yes, Zipporah, if you're together. So thank you, and God bless you. Keep up the good work. Thank you for showing up. Unless somebody has something that is burning, but I beg to close at that point. I beg to close at that point. I beg to close at that point. we can live. Good day. Good day.